This is the market analysis on the 15th of August, the Thursday. We've just had a couple of news release. Well, we had the CPI last night for the US, we had the AUSD employment numbers, we had the UK GDP release as well today. We'll go through all that shortly. If you're on the session, do drop a message, say hi. You can help me out massively through the session if you click a like and subscribe. And if you have any questions at any point in time, please feel free to put it into the chat and let me know. All right. And if you haven't already, the link for the Discord channel is there in the description. So please feel free to join us on Discord. It is absolutely free to join. Now, with all that said, a quick disclaimer: any information contained on this webinar should not be construed as advice and is presented as educational material only. Please do your own due diligence, as the contents of this webinar are not intended to be a recommendation to trade a financial product, as your objectives, financial situation, and needs has not been considered, and you should consider its appropriateness to your circumstances. Now, take that away. Okay. Hey John, how are you doing? Thanks for jumping onto this link, John. We've had 3 links through today. So yeah, hope the connection issue is over. Now, with all that said, a quick review of what happened since last time we spoke. Last night at 8:30 p.m. GMT +8, we saw the US CPI number being released. US CPI was, CPI year on year was 3%. Expected 3%. It got released at a 2.9. So typically, as CPI shows that slowdown, or inflation growth shows that slowdown in inflation growth to a 2.9%, that's supporting the Fed Reserve's so the Fed Reserve actions so far with their rate hikes, as it comes down to that 2 to 3% target level, that should support their next move in deciding to cut rates, right? So in supporting the decision to cut rates, what we anticipated from yesterday to see with this CPI data was a lower than 3%. We were expecting to see the dollar index to drop. What we saw last night, I'll take this away for now, move it to the side. What we saw last night was the dollar index. This was at 8 p.m. there. All right. So before the news, this was where we were. During the stream. Right after the stream, it started breaking lower, started trading lower down. Right, started trading down, broke that 102.55 level, pushed down, retraced slightly during the news. Right, on release of the news, I'll zoom in a bit. On release of the news, we saw that it popped up first. Right, it pushed up, tested that 102.65 level, also that 38.2, well now that 38.2, before pushing back down, right? So before pushing back down. So first reaction on release of the news was that it spiked up, where immediately I was in the Discord group with you guys and I said, hey, the news came out 2.9, but yet we're seeing the dollar spike up. Trade safe, price action is being a little bit odd. So it took a while. It took the close of the hour at 9 o'clock before it started pushing down. It came as low as 102.27 or that 102.30 level, formed a bit of a pin bar before pushing back up again. So that was what happened with the dollar index in terms of the news release from yesterday. Why did it not drop all the way down to test and break that 102 round number support level right? My one idea was that because of that low there, it came down, made an equal low before pushing back up. Another thought was that the inflation number has slowed down to 2.9. We know almost for a certainty, right? Almost for a certainty that the Fed Reserve would be cutting rates when that loads. Right, the Fed Reserve would be cutting rates 100% here. But what you would have seen is also that it was a higher chance, right? It was just 13th, 2 days ago, it was a 53% chance that they were going for a big rate cut, right? A 50 basis point rate cut. But now, after the CPI at a 2.9, it looks like it might have been low enough, but not crazy enough to warrant a bigger rate cut. So it's gone from 53 to a 37.5, and a 25 basis point rate cut has gone from a 47 to a 62.5. So it kind of pushed out that rate cut decision. Instead of a massive rate cut in September, on September 18th, now we're expecting only a 25 basis point rate cut. So that's why we saw the dollar push down, 2.9, low enough. Didn't warrant a big, it didn't drop too much, so it didn't warrant a big rate cut. So that's why we saw the dollar push back up. Okay, so it spiked down, had that reaction, and pushed back up. That's CPI for yesterday. Any questions, put into the chat, let me know. Good morning, Stefan, how are you doing? Then with that, through the morning, we had RBNZ Governor Orr speaking at the Monetary Policy Statement interview on radio, not too worried, wasn't too worried. At an interview on News Talk, again, wasn't too worried. This was at 2 and 3 a.m., super early in the morning, didn't pay attention to it at all. This morning at 9:30 a.m., GMT plus 8 again, we saw the Aussie employment numbers being released. Employment change for the Aussies was 50.2, got revised up to 52.3, got released at a 58.2. Unemployment rate, though, went from a 4.1 to a 4.2. So a small increase in unemployment for the Aussies, but employment change grew a lot more than expected, which was 20.2. So we saw a big jump in employment. Again, very similar to what we saw in the UK employment numbers, where it seems like a lot more people are looking for jobs, they're getting jobs, but because there are more people looking for jobs and they can't fulfill all the jobs, the unemployment rate climbs up. Right? As a result of this 58.2 and 4.2 on unemployment, what we saw on the Aussie at a release of the news was a spike up. So it was sitting at 6,589. It popped lower, I think because of that 4.2 unemployment rate. Then it continued up because, gathering the thought and idea that, hey, as much as unemployment is at 4.2, it's more people looking for work, more people who found work. We saw the Aussie dollar push up. We were having a discussion on this, both on Discord and during the live stream. I did not get into this move, right? I just saw that pop, so I didn't really catch them. I didn't manage to catch the move. What I'm looking for on the Aussie is for it to break past that previous high, which does not seem like the case right now. Then, after the employment number, we saw GDP number at 2 p.m., just an hour ago, for the UK. It was a 0.4. It was expected to come out at 0. It came out at 0 as expected. So coming out at 0 as expected, no big change in GDP, and this is a month-to-month number, so I wasn't too concerned. If you look at preliminary GDP quarter on quarter, it was a 0.6, revised slightly upwards to 0.7, and it got released at 0.6, right? So it's to the upside there. What we saw on the pound dollar was the push up. Where was it? We put that line there, right? Actually, I don't need that line. So it's the previous hour. We saw the pound dollar go from 1.2843 up towards 1.2852. A small increase to the upside, but it's hit that resistance level. The question again is what's going to happen at that resistance. So that was the news that happened over since the last time we spoke. US CPI being released, all the employment numbers got released, and the UK GDP was released. Now, through that, tonight at 8:30 p.m., we do have the US retail sales number to be released. Remember again, retail sales number is or consumer spending is a big proportion of the GDP for the US, or big proportion of GDP as a formula. So understanding the retail sales number for the US is going to give you a bit of insight into the activity or the economic activity for the US. And it hasn't been great, right? It hasn't been great. Last month, it was a 0.3, expected a minus 0.3, came out at 0, right? That was 16th of July. And if you look at the dollar index on the 16th of July, right, where was it? There, right there, right? It came out, it was a 0.3. It was a 0.3 expected, minus 0.3 came out as 0. We saw a push to the upside on the dollar index, a small push to the upside, but then it continued with the overall trend to trade lower after that. On the 18th of June, it was a minus 0.2, expected 0.3, came out as 0.1, a slowdown, an improvement, but still not as good as expected. On the 18th of June, you see right there, it started pushing down, right? So an improvement, but not as good as expected. We saw a push down. So what we're looking for now in terms of the US, there we go, the US retail sales number, it was a 0, it's expected a 0.4. If it gets released, or if it's released lower than a 0.4, we're likely to see a push back down on the dollar index. I'm a bit uncertain. I'm a bit confused, or I query, I question. Why 0.4, right? It's August. There's no big reason why we should see a big jump, a relatively big jump from a 0 to a 0.4 in retail sales number for the US. Core retail sales number that's excluding automobiles expected to slow down from a 0.4 to a 0.1. So I'm kind of thinking that retail sales number for the US might not. I'm thinking that it might not hit a 0.4. I'm thinking that it might actually be just a small increase, but not as much as expected. Maybe a 0.1 of that sorts. Okay, so expecting some downside on the dollar, but that's, I moved that as well. You see that today I was looking for that inverted head and shoulder. I'll tell you more about that shortly when we look at the charts. So I'm looking at this at a possibly weaker number, but we'll look for that. Then through tomorrow, retail sales number for the UK. Now with all that said, we'll look at the charts. Hey Christina, how are you doing? Hey Noachuku, hope you're well. So this was what I highlighted from this morning. Right? Looking at the dollar index, this is what I highlighted from this morning. From the top to the bottom here, it came up, it tested 38.2, and since it tested 38.2 early this morning, it's been pushing back down slightly. But when you draw this out, or when I draw this out, down, bounce, down, bounce, down. If this pushes back up above that 38.2 level, that's going to form an inverted head and shoulder pattern, right? So it's possible inverted head and shoulder there on the dollar index. Then, like I was sharing in the chat earlier, is that it comes to the question of, are you going to, what's your belief? Do you think that technical analysis, chart patterns and technical analysis is going to overrule the fundamentals, right? Because we might see a weaker number on the retail sales number, right? Or maybe you're thinking that technical analysis gives you a bit of an insight into the fundamental analysis, which means that we could see a 0.4 here on the retail sales number, which could mean that we see that push back up. Put into the chat, what do you think? Technical versus fundamentals. Which one do you think is going to have a bigger pull, or is it an insight, or is it going to override? All right. So what I'm looking for here now, the main thing here on the dollar index is that today, being the 15th, CPI, no, not CPI, dollar index, there is a possible head inverted head and shoulder forming, right? Possible inverted head and shoulder forming. If it breaks below, wait a minute, let me see. Possible head and shoulder. I'm trying to think of what I'm trying to say. Okay, if it breaks above 102.70, we could see it trade up to that 102.90 and 103 level. Oops. Okay, no wait. Forming retail sales number data pending. Okay. Price above 102.70 can trade up to 103. And if it breaks, so can trade up to 103. Right, so we're looking at that in the sense that if it breaks above 102.70, you can trade up to 103 in that 61.8 area there, and that gap there. Okay, so that's what I'm looking for. If retail sales comes out worse than expected, worse than previous, it comes out in a negative number or a lower than 0.4, then we're looking for it to break below and you can see that's kind of a double bottom forming as well, right? So if it breaks down, I'm thinking that I actually really like this inverted head and shoulder. I think that if it breaks down, we only see this 102 support, but I'm just trying to think of which level it needs to break down from. Okay. Below 102.45, invalidates inverted head and shoulder, could trade down to 102 support. There we go. Took a while, but we got there. All right, so what I'm talking about here on the dollar index is that inverted head and shoulder forming. Right, it's forming there. If it breaks above 102.70, could trade up to 103 on a slightly stronger retail sales number. If it doesn't, and it does this and goes past 102.45, then we could see it go down towards that 102 support level. But I kind of like that a lot more. Does that all make sense? We've gone through a bit of a multiple different scenarios here on the dollar index. Let me know if it makes sense. Hey Lindy, how are you doing? And it looks like it's at that decision point here right now. If I look, just bear with me as I check the H4 out. I kind of like it. Look, H4 is showing a nice possible head and inverted head and shoulder as well. So that's pushed down. If it sits there, it might push back up. Might form a double bottom and push back up. So we look for that to develop. Okay, we look for that to develop. There is, I'm not, again, remember that the overall trend on the dollar is still to the downside. Right, overall trend on the dollar is still to the downside. So it could very well just come up to this point and turn back down again. With that, then I might actually revise this to 103.290. Right, push up, test that resistance, trend line, test that area, test at 61.8 before pushing back down again. That's what we'll be looking for. Okay. Now, with that said, we look at the other currency pairs. Ronaldo, yes, the rate cut is expected on the, it's not for sure, it's expected on the 18th of September, right there. Okay. Now looking at the Kiwi, right? So we thought that it could sit there and push, it didn't. Take that away. The next thought was that it came down to this area here and bounced up. It kind of formed that to push up. If it got into that because of that pin bar there, I'll move this to the side. Because of that pin bar there pushing up, you will be in a little bit of a profit right now, but it seems like it's struggling. All right, I'll take that away. It seems like it's struggling at this level. Take those away for now. You see that we also do have a little bit of a formation possibly back up. I'm looking at this. I'm thinking, as much as 50 there, I'm thinking that level is holding, that 38.2 is holding. Let me check something else. That seems like a good level. I'll take that there. Okay, there we go. So what we have here is if that inverted head and shoulder plays out on the dollar index, that inverted head and shoulder plays out on the dollar index, that means a recovery, some recovery in strength on the dollar, which means that we could see the Kiwi dollar push lower, right? So it's dropped. It's had a big drop. This was because of the surprise rate cut from the RBNZ. It's bounced back up slightly, came back down, tested this level, and then it might push back down. Okay, let me do that. There you go. Now, the CME tool is a free tool. It's a free tool. Okay, so what I'm looking out for here is that if it breaks this 38.2 on dollar strength recovery, we're looking at below 5990, 5985, 5985, stop loss 20, take profit 40 to the downside, right, towards a 61.8 level. So what I'm expecting is a bit of a push, consolidate, and then a push back down again. So 5985. Sell at 0.5985, stop loss 20, take profit 40 to the downside. There we have, I like that one. Okay. Yes. You're most welcome, Ronaldo. Now, then the next one we'll look at is the Aussie dollar. We saw the employment number, which led to a push up on the Aussie. Right, I'll take that away. Which led to a push up on the Aussie. It's set there. It's struggling. It's not looking like it's trying to break this level. It's struggling along that level. Wouldn't be too keen on that. Let me think. Well, let's put that back in. If the dollar, so now we have dollar's strength scenario, we look to sell the Kiwi down. If the dollar doesn't strengthen, if the inverted head and shoulder does not play out, then we look for it to break past that previous high, 6650. Stop loss will be about 20 pips. Take profit about 65 to the upside. Looking at the way the MACD, the TSRI MACD is forming, as much as I would like to think of that possibility, I don't see that happening. I actually think that it might stay in this range. It might stay in this range. Check the H4. It might stay in this range for a while before pushing back up. Okay, so likely range bound. Right, so I'll say that Aussie is likely range bound, but we'll be looking to buy if there is a breakout to the upside at 0.6650. Stop loss 20, take profit 65 if I'm not wrong. Yeah. So likely range bound, but we're looking for a break to the upside if we see that dollar weakness come back into play. I don't see that for now. Okay, could you sell it down from here? There's a 35 pip move with a relatively strong support. I wouldn't be looking to sell down. I'm thinking that it's going to sit in this area before possibly breaking up. Then on to the Aussie Kiwi. Right, I was quite optimistic on whether it could break that 61.8 and push up towards that previous swing high. It doesn't seem like it, especially anticipating that we might see the Aussie sit right across, maybe even push back down. I think that what seems to be a likely scenario here on the Aussie Kiwi. Actually, I like this. As much as I like this, I don't see it. I find it like turn down. If that turns down, Kiwi dragging down should push the Aussie Kiwi up. The only reason why it would turn down is if we see the Aussie push back down as well. So it might do that. Actually, let's do that. Right, we look for it to come back down to the support, anticipating that dollar strength recovery. I think it might do that. 6585, 20 to 60 to the upside. Sit there, push down, bounce off the support, back up again. So 6585, let's change that to buy at 6585. Stop loss 20, take profit 60 to the upside. All right, so if I'm anticipating that to drop down slightly, that to maybe push lower, then the Aussie Kiwi, we're going to see it test this area and possibly retrace back down. I don't see a trade on this at the moment, but what we're looking for is for the Aussie Kiwi to push back down, possibly down to this area, which is that 50% level. Okay, so I think that this is likely the case. We'll come back down and trade within this range. So it sit in there, might push back down to that 1.0980 level. No big move expected here on the Aussie Kiwi. I think it also depends on what's going to develop on the Aussie dollar and the Kiwi dollar. Make sense so far? Now with that, I think the more exciting one would be on the pound dollar. Right, the more exciting one would be on the pound dollar. It did not drop down to bounce off that 50% level, but as we see on the pound GDP, if we see that dollar weakness come back into play, so dollar strength, we see that dollar weakness come back into play, then you look for it to break that resistance, what we spoke about yesterday, to push up above 1.2870, 1.2875, why did I have that? 1.2875, 25 to 60 to the upside. $1.2875, 25 to 60 to the upside. Yeah, I'll keep that. Naren says, I'm leaning towards coming down to 109.35 on Aussie and bounce. Aussie Kiwi down to 109.35. About there. Looks like a big move. If it does come down to that point, it will be quite a big move. I think that if it comes down to 109.35, it's quite likely it could come down a bit more than that. I think that It's one of the reasons why we're thinking of 109.35, right about there. Let's see what happens. I think it all depends on what happens at this 50% level. It could very well, right, with the way we've been on for the Aussie Kiwi, it could very well just sit there and break to the upside. But we're going to see what happens either at that area or if it comes down at that point. Okay. Back to the pound dollar, main thing is what's going to happen. Is it going to break that resistance? Break that resistance, buy it up 1.2875, 25 to 60 to the upside on dollar weakness scenario. Then onto the euro dollar. I got into this last night. It pushed up. I was going to bed, put my stop loss, so it pushed up. I put my stop loss to break even. The next moment it comes down, close me out at break even, which on hindsight is a good thing. I got in about there. We're talking about this on Discord. Got closed out at break even, right? Which is a good thing because it came right back down again. So now at this point, we don't need that. Took that. 23 will be right there. Okay. I don't need that point. Okay, so now looking at this, that was my resistance at 1.1. Now it's my support at a nice round number. It's sitting right there. That got taken out at break even, take that away. Now, what we're looking at here is a push up, and actually, as much as we've got that big fib level to the upside, you can also, do one here, which is going to show you that level at how it's reacting. I would also be looking for the euro dollar on dollar strength on the inverted head and shoulder on the dollar index. We could be looking for it to break to the downside. 1.0990, stop loss 20, take profit. I don't see a 90 pip move today. I think 45 would be fair. But again, it all depends on what happens at this support level, right? Dollar index still forming that position. So we're looking for that to break the support. You see, we have that as well. That level is going to be quite key. So 1.0990, 20 to 45 to the downside on the euro dollar. Sell at 1.0990, stop loss 20, take profit 45 to the downside. Then, now you look at a pound dollar sitting at that resistance. It could very well sit at that resistance and turn down. So that's something that we're going to watch out for right at that point. All right. Euro dollar looking like it might push down. So on the euro pound, again, same thing. I got into that a little bit earlier. It almost stopped me out, push up. I went up to break even and it came down and closed me at break even. That's fine. That's done and dusted. Now, looking at the euro pound, it came up to that 61.8 level and it's pushed right back down. If it breaks below this point here, which is trying right now, euro dollar coming down, some pound strength, pushing this down as well. We could see this break 8560 stop loss, tight, 10 pips, take profit, 20, 30 pips to the downside, back down to this level that we saw on Tuesday. Right, so 8560, stop loss 10, take profit 30. What's the risk on 10 pips for that 30 pip move to the downside? And you see that because it tested that 61.8 and rejected, for it to trade back down to about that 50% level, I think that's quite reasonable. Then on to the yen. The yen. When it was here last night as it was pushing down, we said, hey, yen looks like it might be developing that move to the downside. I was getting ready for that 200 pip move to the downside, and what happened? It bounced right back up and it sat right across again. Okay, so it sat right across again. Then this morning we were talking about this, saying, hey, if the yen breaks above that 148 level, could have a breakout to the upside. And what happened? It came right back down. So the yen being very consolidative, not unusual, but being very consolidative along this, between this 148 and 146 level. This 200 pip, it's weird to call it a 200 pip consolidation, but actually it's not really 200 because you're looking at 148 to just about 147. Bit of a spike out, it comes right back in. It's more within that range, right? More within that range as a bit of a consolidation. So dollar strength, if we do see that dollar recovery, then we might see the yen push back up. Don't need that, take that away for now. I think it's gonna sit, I think that as much as we would like to see a push up on the dollar, a push in either directions on the dollar yen, I think it's going to sit in that range, but we want to see a reaction either at 148 or 146. Okay, so nothing on the yen for me now. I mean, we can put in possible orders here and there, but it looks like it's going to could continue to consolidate. Watch for reaction at 146 and 148. There we go. Sitting there. Okay. I might jinx it right after I say that. It might just break out, but for now we'll see what happens. Okay. Again, if you can, remember, please help me out. Click that like and subscribe button if you haven't already. On to the euro yen, we were looking for it to test and reject. It didn't. It didn't do too much. Euro dollar sitting right across could push down. Euro yen sitting right across could push down. 61.8 holding quite strong. Looking at that level holding. So now I would say that very similar to what I anticipated for the dollar yen is that euro yen could sit right across. But what you're looking for is if the euro dollar does drop, then we're going to see the euro yen drop as well. You want to see a 161.70, stop loss about 40 pips, take profit, you go down to 90 at the very most. I don't even think it'll come all the way down to that support level. Why do we have a support level there? Because of that way back. Hey Richard, how are you doing? I have no idea what VWAP is. Please, you can elaborate, and I might be able to answer that. Yeah, no idea what VWAP is. Now looking at this, I'm terrible with all those names and all that. Looking at this, just check a few levels. Yeah, okay, there we go. So this move up is sitting in that consolidation. Come down to this point, that makes sense. Oh, okay, VWAP, volume weighted average price. No, I don't. I thought it was only for equities. I thought you only do that for equities. Something I learned, I should have learned or should have remembered from my uni days, but I thought it was only for equities. No, but no, not in particular. Might be, if it's some resemblance to it, maybe, but it's not in particular that I'm trying to deploy that strategy. Okay, so Euro Yen looking for a consolidate, break down from that trend line, push down towards that 23.6 level, support level here at 38.2. I'm happy with that. Okay. We'll keep that. Then again, looking at the pound dollar, testing that resistance. US yen sitting in consolidation. Pound yen in a massive consolidation. Did not break up and then down again. Take those away. It's holding. It's holding. I don't need that. I mean, I can have that. I don't need that one there. 38.2, 50. Okay. So what we're looking at is as it sits in this area, I'm thinking that if the pound dollar does break above that resistance, an opportunity might be there for the pound yen breaking above 189.50 as it's, look at that, as it's pushing up and consolidating. We're looking at a possible resistance, well, not possible, resistance at this level here. If it does break above that resistance, you do have a 189.60 stop loss, 40, take profit, 140 to the upside, or it sits right across and it breaks. I think that there's that opportunity here on the pound yen, where if it breaks that trend line at 189, so it sits right across, you have a 60 pip stop and a 100 pip take to the downside. You could even lower this down to about 50. Okay. Then, let me see, that makes sense. Yes, bounce, 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 break there, break down there. Okay. I kind of like that one. Then on to the US Swiss franc. Right down to the US Swiss franc. We were talking about, I can't remember, I think John was asking about this on possible scalps on the US Swiss franc. Not, I wouldn't, it used to be, I used to always say that the US Swiss franc was very heavily driven by the volatility of the dollar index, but it seems less so now. Seems to be running on its own. That's broken. That's no. So I don't need that. Now I know why I took that away. 50 is still right there. Trend line doesn't make sense. Take that away. Now at this point, it's sitting right across. We're looking for it to break down. You'll be looking at a dollar weakness scenario to break down. 8620, stop loss 30, take profit 50, 60 to the downside. All right, there we go. Cash that one there. Yes, you might be thinking that there is a bit of a head and shoulder there. Not particularly because of that flatness, I would say. So I'm still looking for that. So 8620. 8620, stop loss 20, 30, no. Stop loss 20 will be fine. I don't think we need that much. Even 15 looks reasonable as it breaks. But I'll say 20 at the very max to 60. Stop loss 20, take profit 60 to the downside. Look, the dollar is just super undecided. I'll move this slightly up just so that we can see. It's just super undecided at the moment. Okay, could very well break down to more dollar weakness. We'll see that drop. Then onto the US CAD on the loonie. It broke down last night and then pushed back up, very similar to what we saw on the dollar. Now again testing to move to the downside. I would say that learning from yesterday, you'll be looking at 1.3690, stop loss 20, take profit 35 to the downside. And that could be quite a, especially if the dollar does push down, that could be quite a straightforward one. 1.3690, stop loss 20, take profit 35 to the downside. Just thinking, could we go a little bit lower? It could come down, actually down to this point here. That's a better level, which would see about a 55 to the downside to that one. 35 looks a bit too tight. Because we've seen it test, bounce, and we could see it gain that momentum to push further to the downside. Okay. Then on to gold. Someone again was asking this morning about gold. Saw it drop, push back up, now looking for it to turn back down. I think now as the move developed, this was something we were talking about at 10 a.m. this morning. 1.3680 US CAD. H1 bottom. I think it should be fine. 3680 is right there. No, I think that if it does gain that momentum to break, this point, we could see that move down. I'm quite happy. I'm still quite happy with that. Onto the gold. Anticipating possible dollar strength, looking at the way it's curving and possibly pushing back down in that channel. It needs to stay below 2460. Right? Gold need to stay below 2460. Wait. Straightforward is above 2460 could trade up to 2480. But if it stays below 2460, break 2450, trade down to break 2450 could trade down to 2430. A lot of numbers there. Could trade down to 2430. Okay. No worries. We'll check that again on the daily time frame. Let me see. That's right at, yes, 1.3680. I think that on the daily, it looks like it's going to consolidate and push down. I think that in that move, we could still see a brief downside before pushing back up. The Bollinger is there, but it's not always a very strong support on Bollinger. It could push down slightly to the downside before pushing back up again. So especially with the US retail sales number tonight, we might see that volatility spike it down and then maybe come back up, or spike it down and then push lower again. Okay. So yeah, covered everything. Kiwi still sitting there, not doing too much. Well, firstly, dollar index still on that level, looking like it might develop the inverted head and shoulder push. Aussie dollar might actually push up, but I'm still in consolidation. Aussie Kiwi, no fun. Pound, no fun. Euro, hey, I like that move. I like that move developing. Euro pound might actually bounce from here, but we're going to see what happens. Very consolidative at this point, right across the board for the currency pairs. All right. Okay, so with all that said, please remember, trade well, trade safe. Retail sales numbers to be released tonight for the US. There is employment numbers, but it's a weekly number. I'm not too keen on that. A little bit different today. I'm not going to keep the stream running. I'm going to try and fix up that connectivity issue. So please, I'll see you all tomorrow on the stream. Take care now. Bye-bye.